What exactly will we be looking for this season, and what can it tell us about the state of the overall economy, Danilo?
I would say the most important part is checking whether the traffic is starting to come back within the restaurant sector. Specifically on the fast food companies, we've seen a decay in traffic that corresponded with consumer pulling back in their spending amid value perception deteriorating. And so we are looking to see elements into the earnings season that show that the new value platform that companies have been pursuing is actually working into bringing the traffic back. Even though we do see now that companies are more shifting their strategy toward higher speed of innovation.
Okay, so the innovation is something that they've been working on for quite some time now, but there is so much focus on the micro for many of these companies. For instance, the reintroduction of the snack wraps and how they are doing at McDonald's, some of these value items and some of the combo meals that are being put out there for more value-conscious consumers. How much should we read into those particular parts of the report and the commentary around them?
I would say the obviously getting the traffic back is complicated, especially when you are still in a situation from a macroeconomic standpoint that is showing consumer being pressured, especially on the lower income side. So clearly, companies are looking for other venues other than just value to be bringing back consumers. And typically, the product news tend to be driving, even if it's a short term, but it tends to be driving news and tends to be driving interest from consumers. So looking at the success stories from some of this introduction actually may give us a good insight into some alternative measures that companies could be taking to be really attracting consumers back.
Just one other point here. If there's so much focus, Danilo, on these fast food chains, is that where all of the action is, or can we still look towards the mid-scale and maybe even the higher end side of things because the consumer may be resilient in this environment?
Yeah, I mean, clearly the fast food chains could be, in our view, more could be seeing more compressed earnings than others, and the reason behind it is that they're more exposed to the lower income consumer that has a more significant amount of pressure from a macro standpoint. I think the action is happening across the board. I mean, we've seen also what happened with Wingstop with a significant move last week. We've seen what happened with Chipotle a couple of weeks ago. So the movement within the consumer segment is happening everywhere. At the same time, where the pressure lies, in our view, still remains within the low-income consumer segment, and we're going to see the evolution of that this week with the print of 4 to 5 major QSRs.
All right, and just for the record, your favorite top pick, your best pick in your coverage universe?
Yeah. So I would say after the pull down that Chipotle had and the fears that Chipotle is potentially coming back into the low to mid single digit same store sales, we think that Chipotle has the most dislocated stock right now. In the fast food segment, so if you look at the QSRs of the world, we like Restaurant Brands International because we think that, once again, the multiple is compressed a little bit too much compared to their peers. And once they prove their story that they have some resilient brand behind it, primarily Tim Hortons and Burger King and Popeyes, we are going to start to see the multiple returning into the historical ranges.